Let's welcome in Eddie Gabor, Managing Partner, Key Advisors Group. Well, let's look at the pros and cons here of self-directed investing. That can sometimes be a little tricky, no?
It can. Look, self-direct investing sounds great, and there are some people that can pull it off. But the problem with self-directing it yourself is sometimes you can get caught up in the emotion of investing and make emotional decisions like we saw this year, right? A lot of investors pulled out of the market in March during the market crash and did not participate in the upside. So if you can do it and do it well, then, the wonderful thing about that is it saves you a lot of money because you don't have to pay someone like myself to do it. I think for those that like to self-direct, that sometimes what they'll do is maybe take a piece of their portfolio to manage it themselves and then trust a professional to do it for them, or with them, I should say, especially if you're retired, right? Do you want to enjoy your retirement years or spend 60 hours a week managing your money and looking at markets and knowing what to do? So I'm a big believer in surrounding yourself with a good team of knowledgeable people that can help make sound decisions with your investments.
Yeah, and to your point, Eddie, I will say that I spoke with our family, broker who has a little money on the side for us, and had a discussion about what's going on. And he said that he got a call from a woman who said, I don't want to have my money in here. I'm nervous about the elections. Take it all out and move to cash. And so she did that, and then she called yesterday and said, I want to get back in, get me back in. So she missed what was basically a 7% move by fighting with the broker and saying that she should pull her money out. And so this is the thing about pros and cons. Tell me more about a managed account.
So managed accounts, the beauty, in my opinion, on a managed accounts is you're working with a professional and a team of professionals that the portfolio is built really based around your goals and objectives for you and your family. So the day-to-day movement of the market doesn't influence the investment decision. So it removes the emotion out of the investing. And that's why, again, in our opinion, when you have a managed account using a team of professionals, you're less likely to make a rash decision like the example you just gave, because it only takes one of those bad decisions to cost you a tremendous amount of money, and you'd have been better off paying a team of managers keeping you focused on your goals. So the management team, in our opinion, again, has better research, better resources, and are completely devoted to you and your goals and not letting the day-to-day movement get to you, because this volatility is not going to go away anytime soon.
Right, and you cannot time the market. And so, for example, if you try to, in some cases, she just didn't make as much money as somebody who would have left it alone. But sometimes you can really lose money if you try to over-manage what's going on here. How often do you suggest rebalancing a portfolio, or talking to your broker, or making changes?
So in regards to meeting with your advisory team, I believe every quarter is what you should do. That's what we do at a firm level. Every 6 months on a worst case standpoint. And look, when it comes to rebalancing, you got to really depend upon the markets, right? Because if you just say, I'm going to look at it every 6 months, what if something happens in a 3-month period of time that you should be rebalancing? So we let the market dictate when we rebalance. If you're 3 to 5% overweight or underweight a particular area, is a good time to rebalance. And a year like this year, we've made lots of moves because of how much volatility we've had. Hopefully next year it won't be as volatile, but you always have to be prepared for that.
Right. What do you think about Goldman Sachs' call about the end of the year, 3,700, and the end of next year, 4,300 for the S&P 500? Do you think those are doable?
I do. I'm extremely bullish for the next 12 months. We told our clients in September that we were going to expect a lot of volatility heading into the election, and that volatility should be bought, because post-election, with a vaccine, with a ton of cash on the sidelines, with the economy opening up 12 months out, we think the market, especially on the value side, is going to have a very nice double-digit year next year.
Right, no doubt. Eddie Gabor, thank you. Managing Partner, Key Advisors Group. I really appreciate it.
Thank you. Have a good night.